Ladies and gentlemen, good day and welcome to Nitin Spinners Limited Q4 FY24 conference call hosted by Spinners Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Avnish Chandra from Spinners Limited. Thank you, and over to you, sir.
Thank you, Jico. Good evening, everyone. On behalf of Spinners Limited, I welcome you all to Q4 and full year FY24 earnings conference call of Nitin Spinners Limited. We are pleased to host the top management of the company. Today we have with us Mr. Dinesh Nolka, Managing Director of the company, and Mr. P. Maheshwari, CEO of the company. We will start the call with initial commentaries on the results, and then we will open the floor for question and answers. Now I will hand over the call to Mr. P. Maheshwari, CFO of the company. Over to you, Maheshwari, sir.
Thank you, Avinash ji. Good evening and a very warm welcome to all the participants to this conference for Q4 and FY24 earnings. I hope all of you had a chance to go through our investor presentation that has been uploaded on company website and stock exchange portals. Before Sri Dinesh elaborate on current industry and business landscape, I shall be providing the financial highlights for quarter and full year ended 31st March 2024. Revenue for Q4 24 was rupees 800.71 crores against rupees 750.42 crores during Q3 FY24. That is an increase of 7% on QoQ basis. On YoY basis, revenue increased by 22% from 654.8 crores to 800.71 crores in Q4 24. For the full year, revenue is rupees 2,905.65 crores against FY23 revenues of 2,406.71 crores, posting an increase of 21%. EBITDA for the quarter stood at 116 crores as compared to 103 crores in Q3 FY24 and 71 crores in Q4 FY23. EBITDA for full year FY24 is rupees 377 crores versus rupees 297 crores in FY23, that is a growth of 27%. EBITDA margin for the quarter stood at 14.52% against a Q3 FY24 margins of 13.7% and Q4 FY23 margins of 10.8%. Profit before tax for the quarter is rupees 52.78 crores against rupees 43.07 crores in Q3 FY24 and rupees 40.75 crores in Q4 FY23. For the full year FY24, profit before tax is 177.53 crores against rupees 175.88 crores in FY23. PAT for the quarter is 39.17 crores against 31.75 crores in Q3 FY24 and 38.54 crores in Q4 FY23. PAT for full year FY24 is 131.52 crores against last year PAT of rupees 164.81 crores, lower due to higher tax effect during the current year. So EPS and cash EPS for the quarter is rupees 6.97 and 13.42 per share respectively, and full year EPS and cash EPS is rupees 23.39 and rupees 44.47 per share respectively. As of March 24, the company's debt profile stood at 1,339 crores, comprising 811 crores in long-term debt, 383 crores working capital, and 145 crores as current maturities of term loan. And the board of directors have recommended a dividend of 25%, that is rupees 2.5 per share, that is same as last year. That is all from my side. I now request Sri Dineshji to apprise the participants about industry and present business landscape.
Thank you, Maheshwariji and Avinashji. I would like to first elaborate on the industry. After the challenges which we have faced in the previous year, the textile industry in India has undergone a phase of consolidation during the previous year, 23-24, benefiting from stable raw material prices and a gradual increase in demand. Despite ongoing geopolitical challenges such as Russia-Ukraine conflict, Red Sea crisis, which has resulted in a higher freight cost and extended transit times, our country's cotton textile exports have demonstrated a healthy rebound. This resurgence has led to improvement in capacity utilization and margins within the cotton spinning industry. This growth is largely driven by increased demand from downstream sectors such as home textiles and apparel. The capacity utilization in knitting and denim is still subdued, which is expected to revive in near future. Cotton prices heavily fluctuated in the previous year, which reached to the levels of 110,000 at peak and came back to 55 to 58,000 rupees per candy recently. The prices are now fairly stable since last few months, and Indian cotton prices competitive against international cotton prices. Going ahead, the cotton prices are expected to remain stable in view of good crop in various countries overseas, in anticipation of a good monsoon and crop in India as well. The stable cotton prices eliminate uncertainty and help international customers and the retail chains to plan and forecast their purchases in a better way. This augurs well for the Indian textile industry. Looking ahead, the textile sector is eagerly awaiting implementation of various measures from the Government of India, like establishment of textile parks, PLI, various schemes for boosting exports. The measures were in active consideration, however held up due to elections. I hope implementation of these schemes post-elections will help long-term growth of Indian textile industry. Coming on to the company's performance, the company has effectively executed its expansion strategies, leading to a substantial growth in our revenues. Through the strategic utilization of technology, process optimization, and capacity enhancement, and investments in our workforce, we have witnessed notable improvement in our operating margins as well. Both spinning and woven fabric utilization have reached nearly the optimal levels during the last quarter, contributing to a 7% quarter-on-quarter growth in the revenues. Looking forward, our commitment to innovation, operation excellence, and expansion into value-added segments while being sustainable remains unwavering. With a strong foundation in place, we are well poised to capitalize on emerging opportunities and possess the ability to address any potential challenges. With this, I would like to open the floor for questions from the participants.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Manish Oswal with Nirmal Bang Securities Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity. Good set of numbers given the environment.
Sorry to interrupt, sir. May I request that you use your handset, please?
Sure. Hello, am I audible?
Yes, sir. You're audible, sir.
Yeah. So thank you for the opportunity and good set of numbers for the quarter given the environment. So my first question on the volume growth outlook for F25. Given we have excess capacity, so we want to ramp up our new facility also. So what is your outlook for F25 in terms of volume growth?
We are already in the last quarter. We are nearly running to the top capacity levels. And our total production, if you see our presentation, it is about 91,000 tons of yarn which we have done last year. Our rated capacity is around 110,000 tons per annum, and we can produce, after all giving all efficiencies and others, about 105,000 tons. So we are looking for that kind of capacity utilization, which is about 10% more from the present last year's capacity.
Okay. And secondly, sir, the current spread of yarn versus cotton versus Q4 average spread. So how is the current spread moving in the market?
Spreads have definitely improved, which is why the reason you are seeing a improvement in the operating margin. So, and since the cotton prices we expect to remain stable, basically the cotton prices have remained in the range of 57,000, 58,000 plus minus 3,000 rupees a candy for good last 6, 7, 8 months, which is going to continue going forward as well as we look forward. So margins should remain stable, and as the demand increases, definitely the margin for the spinning should also improve.
And lastly, on the export side of the demand, whether things are improving at a gradual pace or you are seeing a very meaningful improvement in the export demand, especially the centers like Bangladesh and Vietnam, where the demand is improving ultimately. So how you are reading those things?
Demand is definitely improving, and it is not very fast pace. It is a normal pace. If you see the data of imports by various of these countries, we have seen that China has started to re-import large quantities, and in March they have increased their imports of cotton yarn substantially. I think the year-on-year basis the increase is about 35 to 40%. So there is a substantial increase happening everywhere. But from exports from India, overall, if you see, they have improved at a good pace in last 6-8 months, and now I think they will remain stable for next another 6 months on the same levels what we had seen in March and April.
And lastly, what is your outlook on margins for operating? We closed the year, full year, 13% EBITDA margin versus 12.3% last year. So how do you see the margin trajectory going ahead? F25 basically.
Basically, we do not give any projections for the margins, but just an indication is that our last quarter margin was 14.5. So if you are able to maintain that also, it should be substantial improvement from the existing levels, yearly levels.
Thank you, and all the best for the F25.
Thank you.
Thank you. The next question is from the line of Jatin Damania with Swan Investments. Please go ahead.
Good evening, sir, and thank you for the opportunity. So, as you indicated that we are already up.
So may I request that you use your handset, sir? Your audio is not very clear.
Is it audible now?
Yes, sir, it's better now. Please go ahead.
Yeah. So just wanted to understand that now, as you indicated that you are operating already at 80-90% of rated capacity. So taking the we can close FY25.
Mr. Jatin Damania, we are unable to hear you, sir. Hello? Sorry to interrupt, Mr. Jatin Damania. Hello? So your audio is not clear, sir.
Hello. Is it audible now?
Yes, sir, it's audible. Please go ahead.
Yeah. I'm extremely sorry. So I just wanted to understand that we closed this year with a rated capacity, and we clocked revenue here about 800 crores at this point of time. So taking that into consideration, FY25, we will be able to manage 3,200 crores of top line. If one want to look because used to just down the line, how can one look at the capacity allocation and the change in the product mix?
Both are separate things. Means utilization of the capacity, and then accordingly, one is growing the capacity, existing capacity, and another thing is the change in the product mix. So, as far as capacity is concerned, as I have told that we are near to our top capacity, and we have very small leverage left if you compare our last quarter number to increase the capacity, especially in the spinning business. As far as our fabric business is concerned, we still have some scope left to improve upon there. There the scope of improvement, here the scope of improvement is only 4-5%, whereas there the scope of improvement is another 8-10%. So there also we can try to improve. Our knitted fabric capacity utilization has been on a slightly lesser side. So, hello?
Yes, sir. Thanks.
Yeah. So knitting fabric capacity utilization is slightly on the lower side. So we have a scope to improve upon there as well. So going forward, we are trying to optimize all the capacity utilization which we have, and that is the motto which we have for the coming financial years.
So coming financial, I'm agree, but if I'm looking from 3 to 5 years perspective, so from a longer term vision, so just wanted to understand, I mean, are we looking at further expansion or probably we are looking at addition of a spindle? I mean, how shall one look at the growth for 26, 27?
Basically, we are going to add the capacities as we will look at the various kind of products which we want to get into. We have a lot of gamut of products which we can get into. That is still on. We are also always continuously studying the products which we need to go ahead and do the business in. So there is a scope there. Also, we have a lot of scope to increase our capacity in the fabric business. Since our size is very reasonable at this point of time, we have ample scope there to grow as well. So we are evaluating and definitely will continue to grow going forward as well. We have been in past also, we have taken measured expansion considering our size and considering our size of balance sheet as well, and accordingly we'll continue to do that as well.
Yes, sir. And last question from my side, sir. On the operating margin or the EBITDA margin, definitely on the sequential basis, we did improve. But just wanted to understand, we were also talking about some improvement in the power and fuel cost. So what are the steps taken by the company to lower down the power and fuel cost and the benefit of the same that can come in coming years?
We have added substantial solar power capacity. Now our capacity is about 23 megawatts. If you see at the end of the last year, this capacity was about 12-13 megawatts. So we have added more than 10 megawatts of capacity. Further, we will be adding some more capacities during the current year. Whatever the available infrastructure which we have within our plant, we'll further trying to add up another 7 to 8 megawatts of power within our own campuses. So this will definitely have I can just share with you the total generation which we are supposed to have from solar is about 2 crore 70 lakh units. That 2 crore 70 lakh units and our average rate of power is about 7 rupees. And there the cost of power is substantially lower. So substantial earning is improvement in the power cost is going to come in going forward.
Yes, sir. And last question, I'm sorry, but sir, can you help us in understanding what are the current spreads as compared to the Q4 average?
Current spreads?
Yarn spreads?
More or less like Q4. There is no major change in the spread if we compare it with Q4 at this point of time.
Thank you and all the best. That's all from my side.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Rohan Shah from Valcor. Please go ahead.
Hello.
Yes, sir.
Hi, am I audible?
Yes, sir.
Yeah, okay. Hi, sir. First of all, congratulations on a good set of numbers. So just a couple of questions from my end. Sir, could you help us with the degrowth that happened last year due to price, like the last year price degrowth, if you can help us how much it was?
Last year price degrowth was, Maheshwarji, can you highlight on that? What was the average realization per kg?
Yes. So overall yarn price we are talking about last year it was 338 per kg and this year average price was 274 per kg. So it's about 19% reduction in the yarn price.
Okay. Understood. Sir, would you say that as far as the margins are concerned and the revenue is concerned, now we would be going up as compared to the past years, like the last year, and we'll be achieving better margins in the coming year?
I think the worst is over for all the textile industry, barring some uncertain things happening geopolitically. I think so. We should be looking for a better times only ahead.
Okay. Okay. And sir, in Vardhaman Textiles commentary, they said that the demand is gradually increasing, but it will take around 6 to 9 months for a more robust demand. So would that be the same as you said that through 6 months you see the exports being a bit stable?
Yes. Means our point of view is also similar, that still, because of all these disruptions, we expect that maybe it should take full demand to come in 5 to 6 months more.
Okay. Okay. Okay, sir. Yeah. Thank you. Thank you so much. That was it from my end.
Thank you. The next question is from the line of Hemang Kotadia with Anvil. Please go ahead.
Yeah, good afternoon, sir. Sir, my first question is on the cotton side. Have we covered cotton for the coming season, so season ended in March, so have we covered cotton till September or October? And the second question is, what will be our priority in FY25 to reduce the debt, or are we going to expand further in value-added fabric or kind of thing?
First of all, we do not share what kind of inventory we have and how much we are covered. So that is not shared for confidentiality reasons. Secondly, as far as going forward, we are definitely paring down some of our debt, which is a normal repayment of debt of about 150 crores in the next year. So that will definitely come down. And whatever our growth plans will be, we are going to we'll have some growth plans going forward as well. So some part of it, normally in the initial phases, is spent from the internal accruals only. So at least for this next year, you can consider that no new additional loans are going to be added to the company's balance sheet.
Okay, sir. Thanks and all the best for the future.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Abhineet Anand from 3P Investment Managers. Please go ahead.
Yeah, just on you gave the yarn prices, Maheshwariji, average for the 2 years. If you can help the fabric and cotton prices as well.
For this year, as I have told, it is about 274 per kg. And
no, sir, I was talking about cotton and fabric.
Fabric prices. This year, average realization of fabric was 160 per meter. And last year it was about 182 per meter.
And average cotton prices?
Cotton prices this year, average is about 180, and last year it was about 220.
Okay. On the debt side, what are the long-term and short-term debts, and what are the rates for that?
Long-term debt on the balance sheet is, at present, it is 811 crores. It is long-term and 145 of current maturities. So that is 956 crores of term debt and 383 crores of working capital. So term debt is about 5 and 5.5% net of subsidies. Of course, new debt subsidies is still to come. Some loans, this working capital is about 7.5% average.
No, so when you say subsidies still to come, so we are charging at 5.5 or we are charging at normal when the subsidy
No,
comes?
new loans we are charging off in the quarter, it is full rate.
So
For the older loans, we are booking the subsidies because we are getting that. For the new loans of 650 crores, we are not booking the subsidies.
okay, out of that 960, 650 is new loan, and
Yes.
there you are probably charging 8.5 as a number,
Yes.
and the other ones you are charging probably 5.5. So what is this issue with, I mean, is there some delay in getting or something? We have approval for that, right?
No, due to election process, the meetings is not happening, and that's why the sanction is delayed.
So
We have complied with all the formalities. It's just a formal sanction to come.
So this quarter's to 27.8 crore is ideally higher, right, than a normal number?
Yes. Yes.
Because 3Q was 25, and I assume that 25 is an average number for the current debt.
Correct. Yes.
So this can go down even, I mean, without debt going down, this rate can come down, right?
Correct.
Thank you, sir. That was my question.
Thank you. The next question is from the line of Kaushik from Walford. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Just one thing on the subsidy. You said you are not accounting for the subsidy on the new loan, which last time you had mentioned is about 20 crores for the full year and 5 crores per quarter. So once the subsidy is approved, our interest cost will come down by 5 crores per quarter, right?
Correct.
So right now it's 28 crores approximately. It will come down to 23 crores.
Yes.
And for the last 2 quarters, we have not accounted for that. So once that's approved for the last 2 quarters also, we will account for the 10 crores approximately.
So this depends on the terms and conditions of the sanction. It might be from the date of sanction for 5, because the interest subsidy is for 5 years. So we have to see the sanction letter from which date they give. But of course, it will be for 5 years, whichever date they will start.
Okay, and we don't see any hurdle, right? It's just because of the elections. So now, because it's central elections are going on, so it's further delayed.
Yeah, because the result day is 5th June. So maybe the sanction meeting may be held anytime in the first week of June or so.
Okay, sir.
Actually, due to model code of conduct, they are not able to take it up this kind of sanctions because they have to take permission from the Central Election Commissioner for this. So which the state government is not pursuing with. So we'll definitely, as soon as these elections are over, everything is clear, crystal clear in this particular case. So we should be able to get it through within the next 1.5 months.
Okay, sir. Okay. That's it from my end. Thank you very much.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Nikhil Agarwal from VT Capital. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity. Sir, my question was regarding exports. In FY22, our exports, I believe, were about 73% of the top line came from exports, and currently it's about 60%. So going forward, since the export demand is picking up, do we see this 60% mix going towards the 70% plus this year itself in quarter 3 or 4 maybe?
I think your numbers are not right on the export for the FY23. In FY23 also.
FY22. Sorry.
Yeah, FY22 was a extraordinary year wherein we had a lot of export demand coming from all around the world. So I do not foresee that number going there. As a strategy, we would rather keep ourselves limited up to 50 in the band of 55 to 60% on the export side, and that's what I mean.
Okay. So your realizations in domestic and exports are the same, right? Or is it better on the export front?
It is more or less same. It is practically maybe not anything major to talk about as far as realizations are concerned on that side.
Okay, and you mostly export yarn, or is it, or do you export fabric as well?
We do export fabric as well. Our export share of fabric is also substantial. So both are getting exported.
Okay. And so what about, sir, just a clarification. You said can you just repeat your average yarn, fabric and cotton prices for the year for FY24 and FY23? I think I missed out some numbers.
Maitreji? They want the numbers of average yarn realization, of fabric realization, and the cotton prices for last year.
As I already told, this yarn realization for this year is 274 per kg, versus last year 338 per kg. Fabric realization was 160 per meter, and last year 182 per meter.
Okay. And this is FY24 and FY23, right?
Yeah.
Okay. And cotton average cotton prices?
So average cotton prices this year was 180 rupees, and last year it was 220 rupees.
Okay. Got it. So that's it from me. Thank you so much.
Thank you. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Amit Kalyanpur from East India Securities. Please go ahead.
Yeah. Thanks for the opportunity. So can I get to know what is the debt repayment in FY25 and FY26 that is scheduled?
I think it is 145 crores in the FY25, and in FY26 it is 177 crores. Maitreji, am I right?
Yes, 174 crores. Yes.
174 crores.
Okay. And what is the capex expected in both these years?
We have not yet planned the capex. We will, as we get the plans ready for our capex, we'll let you know about that. Normal capex, which is of the routine nature, is about 15 to 20 crores. That is happening. That happens every year due to various requirements for debottlenecking and other things. Apart from that, major capex plan has not yet been decided.
Okay. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. The next question is from the line of Priya Gupta from PG Capital. Please go ahead.
Thank you, sir, for taking my question. First of all, congratulations to the management team for giving a good margin performance. Sir, I have a couple of questions. First is, now we have charged 36 crore depreciation. So is this the full depreciation we are charging now, or this will be a quarter run rate now?
Yeah, this is 36 crore. Every quarter will be charged. So the average, the depreciation next year is expected to be on the current set of fixed assets is about 145 crores. So I think this is what the depreciation is going to be in the next 3-4 quarters at least.
Okay. So my next question is, what would be the maintenance capex for the existing total cross block?
Normally, we do not have a kind of maintenance capex. We do all the maintenance part of on the equipment and others is normally put to the revenue itself. And if we do some value addition or some debottlenecking or we add some machines, then only that is considered the capex, which I just now told is about 20 crore rupees every year.
Okay, 20 crore rupees. Okay, so my last question is, what is your view on cotton prices and cotton crop size in current season?
I have shared in my opening commentary as well that the cotton price have practically remained stable from 58,000 plus minus 3,000 rupees. It has been there for last 6-7 months, and we expect this to remain like this only. We are expecting very good international crop in various parts of the world, and especially in southern hemisphere. And also the coming US cotton as well as Indian cotton crop is also looking good because of the good forecast of the monsoon. So I do not foresee any major increase in the cotton prices, at least in this calendar year.
Okay, sir. Thank you, sir.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. The next question is from the line of Vinayak Mohta with Axia India. Please go ahead.
Hello. Yeah, am I audible?
Yes.
Sir, you're audible. Please go
Yeah.
ahead.
Hi, sir. Congrats on a great set of numbers. So I had a few questions focused, on the growth and the capacity utilization front. So like you mentioned that you've just sold around 73,000 out of the 110,000 capacity on the yarn front and 5,000 of the 11,000 capacity. So right now you have decent amount of capacity left. So is it fair to assume that going forward you will have a double trigger of volume growth as well as realization growth flowing into the business as things improve? And how do you see the volume growing in the next 2 to 3 years?
Actually, for the yarn, our utilization was about 91,000 tons in the last year. So I think there's you must have seen the sales number of 73,000.
I've seen the sales number, yeah.
Yeah, but we have internal consumption also about 18,000 tons. So that has to be added up to this. So on the capacity utilization front, we do not have much left as far as yarn business is concerned. We have spoke to, if we see on annual to annual basis, maybe another 10 to 12% capacity utilization can improve going forward. As far as our weaving capacity is concerned, similar weaving and finishing capacity, we can grow about 7 to 8% there as well. Yes, knitting utilization level is slightly lesser. So there we can have slight improvement over there. So we are focusing on that as well. So considering everything put together, we should be in a range of volumes. We should consider 10% around volumes for the coming years. And as far as realization are concerned, as I've just now highlighted that cotton prices we expect to remain stable. So only trigger now left is the demand. If we foresee a good demand going forward, then only the prices could substantially improve from this level.
Understood. So when you say that you don't have a lot of capacities left, and right now you don't have any kind of capex plans, you might be working on that. So is it fair to assume that you will be able to put up capacities much faster? And if yes, then what is the timeline of putting up that capacity? Because if we are at a cyclical low, then we would want to have capacity set as and when demand comes to be able to garner a larger share of the demand, right? So how are you placed with that thought process? Because you believe that it's almost we are at the cyclical lows. So yeah.
We have just now, I completely believe in what you said, and accordingly we have just now put a substantial capacity capex in place, and it has fructified fully in last quarter itself. So we added about 35% of our capacity in last 6 months only it has come up. Going forward also, utilization, everything is on drawing board at the moment. So once we are ready with our plans of what capacity we are going to add up, what are our breakup of that, we'll definitely share with you about the same. So that will be definitely something on the card.
Understood. But is it be safe to assume that we'll be able to put up capacities fast and utilize the same as well, right?
Yeah, of course, because now the delivery availability of the equipment is also quite reasonable, and also ramp up. We have already the infrastructure to ramp up the capacity. So definitely we are in a good state. We have already demonstrated this in past 4-5 years continuously that once the capacity is put up, we are able to ramp it up pretty fast.
Understood. And so you had also guided towards margins eventually moving into that 16 to 20% range. So is it how do you see that evolving as a longer term target? I would not ask for next year. You've said that we will try to target the 14.5% range. But how do you see the margins evolving over a longer period of time? Because from a historical 10-12 year perspective, this 12-13% for the year is more or less the lows, cyclical lows that you have seen as a business. So yeah, just wanted your thoughts on that.
Yes, exactly. Means this is the margins of spinning industry in the range of 10-12%, and overall have been the lowest levels which we have seen in last 10 years. So definitely it is going to improve from here. If you see industry as a whole, major trigger has been the exports. We have quite a substantial capacity dedicated towards export in form of yarns or fabrics or garments in India as such. So exports need to move on. So that is the prime criteria today. If there is a demand, a substantial demand coming up on that side, definitely we should expect better margins going forward, and that is expected as well once all these free trade agreements which is going to happen with UK as well as EU and various other countries, that should also propel the demand going forward.
Understood. So one last question. So, given the kind of debt we are sitting at right now, and given that you're almost utilized fully, and you expect to put some additional amount of capex as well, how do you see two things? How do you see the debt picture? And because of that, we have also seen suppressed ROCs, right? So how do you see these two parts evolving, considering the fact that you are also aiming to have certain amount of capex, which maybe you are thinking to put through internal accruals? But just wanted to see how do you think the ROC is expanding in the next 3 to 5 years, or from a longer term perspective? Where do you see it as a target?
Actually, total debt to total equity is about 1.16 level, which is very, very reasonable. Plus, given the nature of the industry, where the capex involvement is quite high, to putting up the capacity and then using it as well. So considering that, this is a very reasonable level, and we would try to continue to see that we remain in this 1 to 1.2 band itself. That is one part. Second part is, as far as your ROC is concerned, all these debts are at subsidized levels, 5.5%. So we do not see any logic in repaying them. If you see our return on capital, in return on assets is about 13-14%. Or in a normal margin level, it should be 15-16%. So if you have debt at 5% level, you should rather leverage it rather than repaying it. So you need to keep it at reasonable level. I have also stated in my earlier calls as well that we would like to keep this particular debt interest cost below in the range of 2.5 to 3% of our revenues. So as long as that is there, plus debt equity in the range of 1:1.2, we are quite comfortable making the growth plans as well.
Understood. So just one small clarification that you said that you will be getting subsidy on the interest cost for 5 years, as and when the approval is received from the government. Is that correct?
Yes, right.
Okay, perfect. Thank you so much, sir, and all the best.
Thank you.
Thank you. The next question is from the line of Anil Kumar, who is an investor. Please go ahead. Mr. Anil Kumar, your line has been unmuted. Please go ahead with your question. We'll move to the next participant as there's no response. Before we take the next question, a reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Saket Kapoor from Kapoor and Company. Please go ahead.
Yeah. Namaskar, sir, and thank you for the opportunity. Firstly, sir, in your presentation, and also I think so I missed your opening remarks, so sorry for repetition. You spoke about increase in the proportion of value-added products. So with now the capitalization of around 340 crore rupees from capital work in progress to your asset, what is the current current year proportion of value added, and next year हम क्या expect करते हैं?
Actually, at this point of time, if you see our breakup of the revenues, the fabric portion itself is about 25-26% of our total revenues. So that is definitely a value-added portion. Plus, we have in the spinning business also certain value-added products. So that constitutes around 14-15% of our sales. So that all put together, it is about 38-40% where we do a reasonable value addition in comparison to normal commodity yarns. So this proportion slowly is going up. We expect that total we should be doing it more than 50%. Value addition proportion has to be more than 50% of our total revenues. So this is how, and as far as capital asset is concerned, yes, we can distinguish between the total, what is the capital capex we are doing for fabric and other business, but we cannot distinguish for the value-added yarn specifically how much is being given. It is a continuous process where you have various equipment changed and their production speeds changed and other things done so as to get a better value-add product.
तो जो ये जो जर्नी रहेगी 34 से 50% की, what would be the time period by which we will be
it is about 40%, 38 to 40% at the moment.
Right. So 40 to 50.
Yeah, it's a process which we should be able to, which we are continuously exploring, and even if we do not do any capex or substantial capex, we should be able to get this thing done in next 1 to 1.5 years.
Okay, and this entire 340 crore capex has gone in building up the yarn capacity only?
No, it is not 340 crores. Total capex has been done over the last 1.5 years. 340 crores of working capital work in progress at last balance sheet. Since then, we have added another 500 crores during the last year. So total capex done was about 840 crores, out of which nearly 30% has gone to the value-added portion of weaving, processing, and knitting part that has gone there, and rest has gone to spinning part. And in spinning also, we have taken up certain value-added products also in that. So some portion of that has again gone to the value-added yarns as well.
Right. So when we look at your power and fuel cost, इसमें सर हमारा renewable का mix क्या है, and what has been our investment in the renewable segment over the last 3 years?
First of all, renewable mix at this point of time is about 7-8%. About 7 to 8%. At this, the capacity which we have is about around 7 to 8% depending on the generation. So that is there. And the investment is in the range of, in last total investment is nearly 100 crores, 95 to 100 crores, out of which we have invested in 3 years about 75 to 80 crores.
And those are in the conventional only. That is, we have created assets for power and fuels. If you could give the mix, 100 crore, where the investment has gone?
Everything on solar.
Everything on solar. So 100 crore investment in solar is translating into only 7% of our dependence on renewable segment.
Yes, exactly.
Okay. And sir, going ahead, we will be planning more of it. What is the cost of our power, sir, first sir? अभी कोयले से coal से derive करके what is और electricity से
No, we have power from the state electricity board. And the state electricity board power cost is about 7 rupees. 7 rupees 5 paisa, varying as per the fuel surcharges.
Okay, so that is a significant cost.
Yes.
So sir, as we are seeing that there is so much of investment in this solar space, and then the cost return ratios and the cost will go down significantly. So do we have any plan to going ahead lowering the cost of power, just going through investment, or also pooling of resources with other solar manufacturer or other people coming up with plants and we sharing, coming up with equity investment as has been the case with other companies also. So what's the path we want to glide, and that will also give us an ESG score going ahead, a positive ESG score?
Yes. Actually, that is always on the cards, but if you see, there is a restriction by the central government as well as the state governments of not putting up power capacity in terms of capacity more than what is your sanctioned loads. As of now, we have about 50 megawatt of sanctioned load, so the maximum we can go up to is 50 megawatt. And in that 50 megawatt, the actual power generation is only about 16-17%, about 17%. So the maximum with solar which we can do is about 17% of our total power requirements. And we are already at half of that. And another half, we are continuously exploring that. Secondly, as far as the reduction in the power cost is concerned, it's a continuous process. We work very efficiently on that. We continue to see that, continuously evaluate our power cost in different business, different machines, different businesses as well, how we can continue to improve upon that as well. So continuously that process is again helping us to reduce our power costs.
Right. And lastly, sir, on the road tape part, out of the exports that we do, what is the road tape receivables for FY24?
I think, Maheshwarji, road tape, how much is the road tape last year? About 40 crores?
Receivable total?
Total road tape for the full year.
Should be about 35 to 40 crores.
Exact number is not there with us. I'm sorry.
Okay.
But,
and how much, it is 30-40 crores we have accrued, or these certificates are still lying in the receivable and we will be selling them? How much have we realized in our books?
I think half is realized, half is there in the books, still to be realized.
But we have made provision for the entire amount, sir? Profitability में हमने इसका effect दे दिया है?
No, discounted, we have to do it at discounted whatever we sell at. We cannot account it for the 100% value.
Okay. So 17 crore realization will be for the next year.
Yeah. So that is already accrued for. Average rates are about 98.5 to 98.6. So accordingly, they have been accrued or they have been considered for.
Right.
Might be the exact how much?
Yeah, please.
So 98% पे account करता है, but
yes, right. Only to be concluding about the capex part of the story is done now, and we will be so the capitalization of 340 crore this year and previous year of 500. What would be the increased turnover we should be going on a quarterly run rate? I think so. The quarterly run rate for this quarter was been 800 crore. But the assets which have been capitalized, the benefits of the same will be accrued in the next financial year. So going ahead, taking into account and running at the current exit prices of March quarter, what should be our quarterly run rate of revenue?
I think we have reached the top level in this quarter itself. There is very small capacity which is to be used. If you see the total 850 crores investment which has gone, would have added about 800 to 850 crores of top line as well. About 900 crores of top line. So we were at 2,400 crores of top line last year. And then this new capex should add to another 900 crores. So that is about 3,200 to 3,300 crores level. Top line which should be there.
Correct. Yes, at these exit prices, this is what we can expect. Yeah. Yes. I'll join the queue and on all the better. Dhanyavad.
Yes, sir. Thank you. The next question is from the line of Tejal Nagmoti with Elara Capital. Please go ahead.
Sir, I just want to ask, what is the captive consumption percentage?
20%.
40%?
20.
20. Okay. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take the last question from the line of Vikas Rajpa with GRV Capital. Please go ahead.
Thanks for taking my question, sir. So my question is regarding, the potential, impact of the FTA on our revenues, or rather the benefit of FTA on our revenues. Will we be a, direct or an indirect participant in benefit? What percentage of our total, revenues comes from the UK region, and what could be the ballpark figure that that could probably percolate into a bottom line? So.
First of all, UK means the FTA with UK itself is a very small portion of our top line. In UK, we have exposure of only about 3-4%, not much. But if it happens with EU as well, then that is a substantial portion of our sales, which is more than 20%. So there it is going to be substantially accrued. Now, it will depend what is going to accrue to us will depend on what kind of terms and conditions have been agreed. Today, we are at a disadvantage of about 7 to 8% in comparison to competitors like Pakistan and Turkey, where we have our customers factor in that kind of reduction in the prices from our side. So hopefully we should be able to take care of major portion of that particular advantage.
All right, sir. So that's it from my side. Thank you, and that's it.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. Avnish Chandra. Over to you, sir.
Dinesh sir, before taking your closing comments, a small query. One of your peer is doing good in technical textile, and one of your largest peer has just announced that they are going into technical textile. So have you ever thought getting into technical textile? Because by the looks of it, it is a huge space globally.
Yes, definitely. This is a very huge space globally and have a lot of scope to grow because in India still we are at a very smaller size, and definitely as a company we keep on looking at all the opportunities, even the technical textiles. So even if something comes up, definitely we'll update you about that as well.
Okay, sir. Thank you very much, Dinesh sir and Maheshwari sir, for giving us this opportunity to host the call. Sir, any final commentary before the closing?
Yeah, sure. First of all, I would thank everyone for taking out the time for joining this earnings call. I hope we have been able to address all the queries. I also thank Smith and Avnishji for hosting this call. For any further information, kindly get in touch with our finance team or our investor relations advisors. Thank you all for once again taking the time to join us.
Thank you.
Yeah.
On behalf of Spinners Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.